Hi everyone and welcome to part 2 of the EMA Strat. It's been a few weeks since I put out part 1, but it's really important that you go and watch part 1 before leading on to part 2, if that wasn't clear enough already. Part 1 went over the EMAs itself, some general tips and rules, which I will go over again, but it's very important to go over part 1 and get a general understanding of the EMAs themselves, what the EMAs are, how to use them. I will go over them again now, but this episode or this part is going to be more on the use of the EMAs and identifying which trades you should and shouldn't be taking with the EMAs. There's a big difference between using the EMAs and not using them, and which setups work and which setups don't. And I will go over the tips for using the EMAs once again, and also the rules and the checklist, which is very important and something I tend to stick by before executing on a trade. So yeah, let's get into this episode and hopefully we come out of it the other side with a bit more knowledge on using these EMAs and the setups you should and shouldn't be taking, because what I've been seeing of people trying to use this strategy is a lack of understanding which trades they should and shouldn't be taken when using them. So we'll go over the tips again. The EMAs are lagging indicators, and you can front run the EMA crossover, the buy signal. But it's a lot riskier when doing that. So for example, you can see on IP right now, we have buy signal. And again, here we haven't actually got the buy signal yet. You could, in fact, if there was a setup here that you liked, front run the buy signal. But as of right now, we can clearly see prices trading underneath the EMA 89 still. It is above the EMA 21 on the M30, the EMA 21 on the M5, and the EMA 89 on the M5. But as of right now, it's trading below the EMA 89, which we can see that back in the middle of Feb, when it was trading below this area, it wasn't until it flipped above it started trading higher again. So you can front run the crossover, but I advise that you are waiting for the flip. So EMA should be a bonus addition to your current strategy to use as assistance and extra confluence for a trade. So in my case, I use EMAs with market structure, supply, demand, and breakers. These are general setups I used before I put EMAs on the chart, and they're general setups that I will continue to use with or without EMAs. Either way, the EMAs just add that extra addition to the strategy. Do not use this strategy completely on its own. As I just said, it's very important to use it in addition of other methods. You shouldn't simply rely on an EMA for an entry. Equally, you shouldn't always rely on a buy signal for an entry. This is just a way of identifying when we have the crossover, and then we can look at starting to take a trade, right? And we'll get onto these buy signals later, as there's very much a do and don't setup that you want to be looking at with these buy signals. Focus on strong trending coins, ones that recently had big moves or some interest surrounding them. I've given many examples of ways you can identify these strong trending coins. There's a few things like filtering to on the Bybit list. You can go to the download a Bybit perp list, and then you can filter to the change percentage. So depending on how strong we are on that day and what coins are trending strong, these are the coins you want to be trading for the strategy. And then you can also looking at the likes of Orion Terminal. So we have Orion Terminal and Vivitas. Both of these are like asset screeners, and you can see which is strong on the day, which has good OI change, negative funding, etc. All of that good stuff. So EMAs do not have to bounce. You should use them as a trend tool. This sort of links back to what I was saying earlier, is that you shouldn't just use the EMAs on their own. You should use them with the assistance of other trends and other tools, other methods of trading rather than just an EMA on its own, right? They work well in strong trending conditions, but once that trend is lost, it's almost, as it is a lagging indicator, you almost catch on to that too late. So you want to identify whether the trend has disappeared early rather than relying on EMAs to tell you that, because they are a lagging indicator. So the rules / checklist for the buy signal strat. So if you're using the EMA 21 as a continuation trade, this doesn't mirror that, but it is for the buy signal. So this is strictly for the buy signal. So obviously you want to have the 21 and the 89 crossing over. If not, that is a riskier trade. We already discussed that. Since the buy signal was given, the EMA 21 and 89 must have crossed over. Ideally, the M30 EMA 21 has been retested as well. This is not necessary, but it is a nice addition. So What I mean by that is once you get the buy signal, it's quite nice to see an EMA 21 get retested and bounce, because then from there you usually see a trend. Sometimes if the EMA 21 does not get retested, and it will just, break away from it, but a lot of the time it does. Look at following the buy signal, look at playing continuation setups around the M5 EMA 21 if the trend is strong. So you can go back and look at part 1. This should cover everything here that you need to know, and all of the main pointers from part 1. But part 1 was mostly getting to know the EMAs. We're going to get onto some setups now, and the ones you should and shouldn't be taking. The coin you are trading has recently had some strength, or is showing strength for that day, week, whatever time frame you are trading it on. A lot of the time using these buy signals, you are looking at trading the intra-week and intraday side of things, because it's the M30 time frame. So with this VVV trade or VVV chart, you can basically see that VVV had a strong bounce and a buy signal. And then it started to trade pretty well. So this was on Tuesday, the 3rd of Feb, and then Friday, the 7th of Feb. So a few days later, we also got another buy signal. Along with that, you also had a really nice SR flip with a gap above. So this was a trade I took myself. But we know that this week, VVV has already showed strength. So since it topped out and crossed over, it's now put in another buy signal. So we could potentially be looking at another continuation setup for VVV. So we took the trade, and then you can see how this chart ended up playing out. It pretty much gapped up to the opposing side of the volume node area eventually. And there we go, it hit my target and we sold into the highs. But you can see how when price gets the buy signal, and then eventually loses the continuation, and then you get the buy signal again. So what it sort of has is this cool off into another buy signal, and then you look for the continuation again. So a lot of the time it's quite hard to catch the first buy signal, but if you know the trend is strong, then you look at playing the second one, because you know at some point earlier that week, last week, whenever it was, there was strength there. So we can look at IP as well, right? If we remove this, we can look at IP and see how this traded. So 16th of Feb, we had a buy signal. IP had a crazy move up. And then from there, it had a cool off again. And then again, you see second buy signal, right? So this buy signal was given on Monday. So almost a week before, it had a crazy run up for that week. It cooled off over the weekend. And then we got a buy signal going into Monday again. Again, the second buy signal. We know that previously IP trended well. So we look at the buy signal, and then we look at playing continuation off this setup. In which case IP had a support, deviated below that support, reclaimed it. We had the buy signal. We know that previously IP traded really well, and then you see the continuation. So with that in mind, we can look at the current setup on IP, and we could say, okay, we now know that so far this week IP has traded pretty well. It's had a cool off. Currently it's trading below the M30 EMA 29. If price reclaimed back above this area, let's put it on like the 4 hour, we can see that there's like a 4 hour level here. If price deviates under this 4 hour level, the M30 time frame gives a buy signal. We can look for continuation on that, because we know there is interest on this coin this week, right? Going on to Kaito, similar thing. Buy signal was given, price traded up, had a bit of a cool off, lost the setup again, had a bit of a deviation, buy signal again here, ended up continuing back up again. Again, we see the second buy signal. It's very hard to time an entry on the first buy signal unless it's like an A+ setup, but a lot of the time you're always looking for this second buy signal for price. And again, always looking at coins that have previously traded or trended pretty well. You can see ALCH here. This is a setup, obviously, it's slightly different, and you can see how many buy signals price was forming over and over again, and then that one buy signal ended up leading to a move up. This is why it's pretty hard to try and time reversals on coins that are in a downtrend, because this EMA strat tends to print quite a lot of buy signals over and over again. But on something like ALCH, you can use the M5 EMA for continuation setups. You can use the M30 EMA 21 for continuation setups as well. So we know that the trend is strong on ALCH. So potentially if ALCH flips here and we see a good continuation setup on the buy signal on the EMAs, we can look for a continuation. This probably won't give a buy signal again until it actually sees a proper cool off, the EMAs cross over, and then you can look again. But for now, as long as the trend remains strong, you can look at these EMAs for continuation setups. So I want to use Ondo as an example for why it's important to look at strong trending coins against ones that have been in downtrends. Right, you can see Ondo has been in a downtrend for quite a while now, and you can see the amount of buy signals it has given. So really, I wouldn't trust these buy signals at all unless Ondo gave us a big move, a cool off. So let's say we get a big move here. It gives a buy signal on this move up. It has a cool off. The EMAs get lost, and then at some point, it gives a good continuation setup and a new buy signal forms. This is the buy signal I would look, right, to buy it, because we know previously Ondo traded well. So now we look at playing the second buy signal. It's very hard to try and time buy signals on coins that are in a downtrend like this. It's best off to wait for the trend to kick in. If it has a little cool off, we look to play that second buy signal, right? So buy signal here, then we look to play this second buy signal here. Hopefully this makes things far more clearer for you and identifying EMAs and which coins to be trading. But it's really important to play continuations on this and also not marry positions. So we'll go back to this VVV chart, and you can basically see what happens from VVV here as an example. So it's important not to marry a chart, because over time, if it does lock in a downtrend, you can get into a false sense of security with the buy signals. So looking at VVV, we can basically see that since then it topped, right? So we've got that cool off, and now we're looking at potentially a setup here. This is not a good sign for me. A lot of the time you want to see fast continuation from that initial buy signal. When you move into these sort of choppy ranges and you see constant buy signals forming, this is not something I'm interested in. I like to see a buy signal and continuation. I don't like to see it stall as such. But as the more and more buy signals start to print, the more saturated the setup becomes and the less valid it becomes, right? You can see how many buy signals have been printing here, and it simply did not give a momentum move higher, and then it just falls into a downtrend. So it's important not to marry a buy signal, right? If it doesn't give you a continuation setup fairly quickly, look to cut that position and move on to the next one. So I feel like I've covered a lot here, and the main pointers that I missed in the first part was the setups you should and shouldn't be taking, and that's really important because it can save you from a lot of losses in identifying the right and wrong coins to trade. Hopefully this part 2 was effective and will help you in getting to understand the EMA Strat further. I have linked in below the video the indicator that I'm using. This is my own script that I've made. It's a very simple script, simply made from 4 EMAs and a buy signal formed when you get the crossover. But if you do want to use this indicator, it's privated and in the description below. Hopefully this part 2 was useful, and I hopefully will see you guys in part 3.